Alright, welcome to a video lesson on the two trades that I put on today, VIVE and SGLB, both active trades. Put on 3 trades for the day. All 3 failed. Not too concerned. There are going to be times where you put on the trades and they don't work. And VIVE is a prime example. I'm going to show you what happens when the VWAP strategy fails, how I got into this. We're going to start off the top. This 2-minute chart. So first and foremost, in front of this, I was trading the top mover of the day, and VIVE and SGLB were toggling between top mover of the day. This is actually the second trade that I took in between it moving for top spot on the movers list, but I'm going to get into this one first and just give you an idea on the actual strategy that I used here using the VWAP. So when I actually caught up with VIVE, I had already been kicked out of a trade in SGLB. And what I had noticed is that VIVE had moved up pretty aggressively into a halt and moved up aggressively again into another halt, came back online, pulled back and into a halt, and there was just a lot of chop going on through that area. Now, what I was looking at on VIVE, and this is the only trade I think I put on with this one, was going to be this pullback right through here. Price action actually pulled back and stepped lower, and what I wanted to do was I wanted to actually get in on this high. So this is going to be what I refer to as a VWAP bounce. It's kind of the last high above the VWAP. I'm not worried about any of this stuff selling off. I'm just curious about, am I going to be able to get in on a breakout right through here while it bounces off of the VWAP, and can I make it up to the high of day? So for this one, the trade was really going to be a VWAP bounce using these fibs. What I was going to do is this, and this is how I targeted out the entire trade. It is technically a dip buy, but we call it the VWAP bounce, and essentially do everything that we do to get up to that 618. So the idea is that we're going to do the VWAP bounce right through here, get long, and should it move correctly, it would move from 120 to 130, and then from 130 it would kind of ebb and flow up to a primary target of 160. Now, if that was the case, that would have been a pretty decent trade, because there only would have been about 10 cents of risk on this, making this a 3-to-1. Not too bad. VIVE actually failed, and the way that it failed was there was the VWAP bounce, it moved up and sold off, and it was right through here that I got sold off on. Now, the thing about this particular candle is if I highlight it, you'll see that there's a lot of selling volume. So for me, what I want to do now is I want to actually use that as the VWAP bounce candle, and the reason why is because there's a lot of volume that pushed that lower. So if it breaks out on more volume, that's going to suggest a turn in the demand story. And so I was marking off this volume candle with this actual price action candle, and I was doing again another VWAP bounce. And so price action dropped, consolidated, and bounced off the VWAP, and then we took out this high right through here, and I entered, and it struggled, and then sold off. And on the last trade of VIVE, I actually got a bad fill by 2 cents. So I lost 2 cents on the sell side, which was a bit annoying, but that happens. Point is, when you're looking at the VWAP strategy, there's 2 entries that I look for. The first one is a nice solid 5-minute bar to close, pardon me, like that, and then a pullback, and then I use the Fibonacci's on that 5-minute bar. When it hits the 618, I move my stop up, and if it runs, then I'm in the run zone, and I've locked in profits. The secondary strategy is after there is a run up and price action gives back a little bit and reverts back to its mean, I look for the VWAP bounce. And today on VIVE, it was very much a trade on the VWAP bounce after the fact, and it failed. So remember, this has about a 65 to 70% success ratio. So there are going to be times where you get into these trades where they're going to fail. I mean, they've got a greater chance of moving, but they do have a failure rate, and that's exactly why we manage our trades from a risk perspective first. So here's my first trade of the day, and this is where I would have used the first 5-minute bar sort of 618 target play, and that is this bar right through here. You can see that it moves up and it drops down. As soon as I see that, I'm actually going to mark off the fibs just like so. And this is the first strategy that I use on that first 5-minute bar on a mover. And I like to look at the 618. I also move up to the 100. And lately I've been seeing a lot of 1618s hit. So I'm practicing a little bit more patience up in those levels. Now you can start to see that the way that this trade develops, that there is potential for this to be a big trade. I got in at 490, which was the top of that candle, and then I was using these fibs as markers to get me out of the trade in profit. Now what happened here was this thing printed, I got long, it printed and got weak, and I actually got stopped out, I think right down here. Now the price action on the spreads here, they were moving, and they were pretty crazy the way that they were traversing, and the real point where this started to fail was when I was looking at 525. I'll show you on a closer lower time frame, but this 525 level really was dictating whether or not this trade was going to work out. And you can see that we pin barred and it failed and it dropped, and then we got a reversal, a nice bearish pin bar, or bullish pin bar, pushing price action higher, and it did. But again, there were no buyers up here. This is where the demand stopped, at 527. I was watching 525 on the prints, and it got up to 525, and it could not break that level. Now, obviously, in a situation where 525 is getting hit, if a buyer was to step in and move it higher, it would have gone across that 618. A lot more buyers would have stepped in, and it would have probably gone up to 574, making this a really great trade. But at the end of the day, that didn't happen. The buyers weren't there, and this was more of a supply story. And you can actually just see that right through here, that was the rollover. It could not hold the VWAP, and so that VWAP collapsed. And as it stands right now, this stock is only up 30%. Now, to put this in a perspective for you, pre-market, this thing was a triple-digit gainer. It was a monster, and it faded, and it really hit the bricks. So this trade really was not meant to be. And then there was this sell-off right through here, and when it was holding this gap up through here, I thought, you know what, if this bar can reverse, maybe there's a reversal to get long at about 465, same target. That would have been a great trade, but you can see that it took out the VWAP, a little bit of a dead cat bounce, and then it faded the gap, and we've probably at about a 50% gap fill now. But that's a video lesson on the VWAP. The great thing about the VWAP is there are a number of strategies that I use here, and the first strategy is when I'm waiting for that 5-minute bar to close right through here. Strategy number one is I put up the Fibonacci's just like so, and I immediately head to the high of that 5-minute candle breaking out and moving straight into the 618. Now that is a very, very high probability trade that will work out more often than not if there's confirmation on the breakout. That in itself, as a singular trade, has done very, very well more times than not just on the low floats. The second trade is going to be maybe on a smaller time frame, and what you're looking for is the VWAP bounce. And the VWAP bounce is there's a move, it pulls back, and then what you're looking for is that last level over the VWAP. So here's the VWAP, and the idea of a VWAP bounce is that it would break 509, and the way that you would do that is you would also put your fibs up like so, and you'd come across, and then you'd be looking to target out around 610. So in this type of situation, a VWAP bounce at the 618 could take you into 1 full point of profit, and if you're trading on about 1,000 shares, you're going to make $1,000 on the day. Not a bad day. You do a couple of those a week, you're laughing. That's a video lesson on VIVE and SGLB. All three of my trades today failed. That's okay. I've just ended another 20 block of trades with a 65% success ratio. So I can tell you that the VWAP strategy does have a high probability level of success. And if you're curious about it, you should definitely do some research on it and watch the VWAP course.